In this video, I will be giving an update on the SP 500, the US dollar, gold, as well as USDCHF, USDCAD, and a quick recap of the EURGBP trade. This is the SP 500 E-mini futures daily chart, and we are looking at time cycles here in pink of about 7.5 months, here in blue of a little over 2 months, in yellow about 1 month, which we can ignore for today, and in orange of about 2 weeks. In last week's video, I discussed the possibility of the 7.5 month cycle coming in early, as well as the possibility of the 2.5 month cycle coming in early. I'm now becoming much more open to the possibility that this one, yes, may be in early, the 2.5 month cycle, but the 7.5 month cycle is starting to look like perhaps it might be coming in late, and it might come in with the low of this cycle here around the beginning of August. My reasoning for that is the US dollar, and we're going to look at a side-by-side comparison of the US dollar and the SP 500. We are now looking at the US dollar daily chart on top and the SP 500 chart in the pane below. And so what we're concerned with are these pink cycle troughs, which are a different length in the US dollar than they are on the SP 500. These are a little over 5 months. And as I've discussed in the last few videos, I've been expecting this trough to come in the US dollar, and I do believe it is in now for a couple of reasons. Number one is we have taken out the prior 2-week cycle high, which in last week's video, or 2 weeks ago, we had begun to do that in a few individual pairs, which was leading me to believe that the bottom was in. However, we had not actually done that in the dollar yet. The next reason is, well, we're running a bit late for this cycle trough to come in, and the later we get, the more likely it is that it's going to happen. The final reason would be we've seen enough strength at this point, and we're starting to move far enough into this 2-week cycle trough that I would expect that by the time this peak does come in, we will be putting in a higher trough on the 2-week cycle time frame, which would suggest the longer term correction is over once the shorter term cycles begin to show positive momentum. Now, with that in mind, assuming that the pink cycle trough is in, what does that mean for the S&P? Well, let's take a look. We're going to look at the last 9. I believe there are 9. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 9 cycle troughs. So we'll come all the way back over to January of 2021. When the pink cycle trough came in, the S&P 500 mostly just moved sideways for a period of time here. It did have some upside, but was mostly sideways from January, early January, basically to early March. In the next cycle trough, from mid-May until about mid-June, we basically just went sideways. So in those first 2 troughs there, we pretty much went sideways. But we're going to see going forward that's not typically the case. So 2 out of 9 so far, sideways action. The next cycle trough, what happened? Let's take out a measurement tool here. Here's the trough. That pretty much lined up with this peak in the S&P, and that ultimately led to about a 6% correction, 5.5%, 6%. In the next case, dollar bottoms, the S&P had actually already topped. It lined up with the first lower top in the S&P, and then that was kind of the beginning of actually like a 25% correction. But at least in the shorter time period here, we had over the next month and a half about a 12% correction. The next cycle trough for the dollar was around this period here, which again was in the middle of this longer term correction, but in the very short term, we still had about a 12% correction over the next couple weeks. The next trough of the pink cycle was towards the end. We still had a pretty good little 7.5% sell-off over that last couple of weeks there before the S&P 500 found its bullish momentum again. However, even once the bullish momentum in the S&P 500 returned, the next trough in the dollar led to this peak here with a 7 or an 8% correction. The next trough in the dollar kicked off this 11% correction. The last trough in the dollar was actually a very minor correction to sideways action. So in the very short term, it corrected, I believe, about 3%, 2.5% maybe, but ultimately went sideways for 2 or 3 weeks. So in 3 of the 9 cases that we just looked at, there were very small corrections to sideways action. But in the other 6 cases, there were corrections of about at least 6%, if not more, and generally over a pretty short period of time. Some of them did lead to more extended, longer-term corrections or were part of a longer-term correction. But in the short term, there were some pretty drastic drops. Now, I'm not suggesting that's necessarily going to be the case for the S&P 500. However, it would suggest that we very likely will see some type of correction that would line up with a late trough of this pink cycle here. So we're back on the E-mini futures daily chart. I'll get rid of the SPX chart at the bottom here. And that would suggest we very likely could still see the pink cycle correction come in this blue 2.5-month cycle here, which would suggest maybe out to early August. This is the SPX daily chart, and if the dollar has bottomed and if the S&P 500 has topped, what would happen is I had 10% up here, assuming we would reach this upper warning line. I thought there would be a 10% chance that perhaps this general area could hold. I no longer would believe that to be the case, because that would mean we go exactly sideways. And what I would actually do is, and I've already done it, move that 10% down here. So this would actually bump up to 20%. This area would remain the same, but I would lower this to 30%. But then this one would increase to 50%, and I would move this box down here, because this box is based on this corrective median line set here. And before, I had this on as a hypothetical scenario if we were to reach the upper warning line, and so that's why this box, this box was here. But again, wherever this top comes in is where the final pivot of this median line set would go, and then I'm going to give a 50% chance, again, assuming this is out of the question, a 50% chance that this is where we're going to, and then again, a 20% chance that we'll achieve this lower warning line. How would these targets line up with the historical analysis we just looked at? Again, based on those 9 cycles, there was a 66% chance that we would get roughly a 6% plus correction. So where would that lead us? Assuming, again, this is the top, we could go higher, but wherever this top comes in, we can just measure 6% down. And if this is the top, 6% would land us right about at this median line. This is about 7%, but I think most of them were 7% plus, and a few of them were 10 to 12% in just a couple of weeks. And this would be 10% to the lower warning line. So this is starting to look like a very realistic possibility based on the dollar and based on, again, where these median lines are potentially setting us up. So in last week's video, I discussed how I put some longs on after we found support at this median line set here. Well, based on what I think is happening in the dollar, I'm going to close those out at market open on Monday, and those will be a nice little profit, but that does not mean I will be looking to go short yet. So what will I be looking for to go short? We're back on the E-mini futures daily chart, and I will be looking for the 2-week cycles to start rolling over. And what that will look like is we put in a 2-week cycle trough. This is just hypothetical, but let's say the 2-week cycle trough comes in here. We find our bounce out of that trough, and then we break below wherever that particular trough comes in. That would suggest the shorter term momentum is negative, and we are moving towards the longer term correction of at least this blue cycle, if not this pink cycle. And so this may not actually be the pink cycle trough. It may actually move out with the trough of this cycle here. If you like the video so far, be sure to hit the like button and subscribe for more content. We are now looking at the US dollar daily chart with gold in the pane below, and we're going to see basically the same thing we just saw with the S&P 500. When the pink cycle troughs in the US dollar, gold sells off. It sold off here. Trough, sell off. Trough, sell off to sideways. Trough. This one, actually, they moved in a positively correlated manner. There was a small pullback, but then they ultimately did move in a positively correlated manner until the next trough, where a larger sell-off had already begun and continued. Trough, sell-off continues to the end. Trough, sell-off, trough, sell-off, trough, small sell-off to sideways action, and then they've been moving in a positively correlated manner since, but gold has actually potentially already topped before the dollar bottomed, and I believe, and we will take a look at the gold chart now, but I believe that the gold chart is suggesting continued movement to the downside as we look for the trough in this pink cycle, and it appears using the orange cycle, where here the orange cycle is about 2 months, the blue cycle is a little more than 3 months. But we have just taken out the low of this orange cycle and what I believe to be the prior blue cycle, which would suggest a longer time frame correction is underway. And so we would expect the remainder of this blue cycle to be negative and potentially bring us towards this lower warning line or even lower. So what I'll be waiting for in gold is to see this orange cycle trough. We'll look for a bounce from it, and then we will look for that cycle to roll over, and that will be a good opportunity to go short for the remainder of this blue cycle. And what we can do here is we can start to look for targets using median lines. This is a standard set. We're going from prior high to the prior blue cycle high to the current blue cycle trough, and then if this is indeed the current blue cycle high, this is likely the frequency from which we will move down into trough of this blue cycle. And you can see we already achieved the median line and then found approximate support before moving up and rejecting from this median line, which is much longer term. And if this is acting as resistance, and we have sold off hard from that, exactly as we have, it would suggest we are likely going back to the lower warning line. So now we have a potential target. So we'll just look for a potential entry. So if we bounce, we get a clear bounce and we find the trough for this cycle, we can start to look for resistance either at the upper warning line or perhaps these median lines. And if we reject from there, we can potentially look to go short. This is the USDCAD daily chart, and I am at it again. I have entered a long, I missed the initial hourly entry and made it on the second hourly entry. It could have gotten a better entry on this, but I was not at home at that time. But using the daily chart and using the pink cycle, we have a modified shift from the prior pink cycle trough, prior pink cycle high, to the initial trough of this new pink cycle, or the final trough of this pink cycle. And that gives us this median line set and this target. And so while we did break below the quarter line held, I did not put the quarter line until after we regained this. So this was not something I would look to trade, but it may be relevant in the future now that we have seen that it is, or it was relevant in the past. But that gives us our target of this median line. So my first target is 1.4 to 1, where I'll look to take half off. And then the other half, I will be looking to take off towards this upper warning line of a much longer term median line set, which I discussed in prior videos, and that's at about 3.88 to 1. Along the way, while the cycles, the 2-week cycles, and these are actually shorter than 2 weeks on the USDCAD, while they're a bit wonky right now, they don't line up very well, I will look for them to realign themselves properly and see if I can find additional entries for this on the way up. And I think USDCHF might be a better opportunity for that, as these cycles have been a bit more consistent than USDCAD as of late. And as you can see, I've done the same thing. I actually have a standard median line set on here. Prior pink cycle, initial trough, high, trough. And so what we'll be looking for is this median line as a target. And I have a longer term median line, which I've discussed in prior videos, up here. And ultimately, I think that is where we're going. So while I have not entered yet on USDCHF, just like I did, or I discussed in the last video or 2 videos ago, I will ultimately be looking for one of these cycles to hopefully bring us back down towards this median line. Doesn't have to touch it, but if it can come close and then give a nice hourly bullish candle, that can give us a good potential entry where we could hopefully be looking at something like a 30 to 40 pip stop. And then we have this moving median line target, which by the time we get there could be something like 280 pips. That could be a nice 7 to 1, where I would look to take a third, and let's go to the daily chart, because I'd be holding the other third, looking for this median line set here. And so that's 2/3 of it. So where would I take the first third? Well, let's actually go back down to the hourly chart for a moment. And here is where I would look to use the 2-week cycles to put on a median line set for the shorter term. Wherever this high happens to come in, let's just say it reaches up here, and then wherever this low happens to come in for this 2-week cycle, that will give us our shorter term target. Or I may just take it at this upper warning line, as this has held pretty well as resistance in the past. And so if you can get a 30 to 40 pip stop somewhere on there, right, and that's about 30 pips right there, by the time you get up here, you're at 2 to 1, or perhaps better than 2 to 1. And then once you take 1/3 off, as long as it is 2 to 1 or better, the whole position is free. And then you can comfortably hold the other 2/3, because again, it's free. That position is paid for by that first third. You can hold that pretty comfortably, looking for that 7 to 1 and that potential much longer, well, that's like 15 or 16 to 1 on that final third. Now, does it always work out that way? No. Sometimes you don't. You never get the good entry. Sometimes it just starts to go. And if that's the case, well, you can still then use perhaps the 4-hour or the daily chart, looking for continuation after you get the pullback for these troughs. But ultimately, the idea is, if the dollar is putting in this major bottom, then the US dollar pairs, should be strong. And so you want to look for continuation after pullbacks in these cycles as you move towards these targets that you have in mind. Finally, this is just a quick recap of the EURGBP trade I've been discussing over the last few videos. So after Friday, or towards the end of the day on Friday, I had moved the stop up into profit, as I discussed I would. I put it just above Friday's high. And then actually today, this morning, I closed it out at exactly 2 to 1 before it achieved this target. Because if we go to the hourly chart, what happened was it had just missed my target. And I had looked at it, I guess it was probably about 6 o'clock, 7 o'clock, and we were bouncing up. And on the daily chart, it looked as if it might be putting in a big wick, and like it would ultimately be finding support at this lower warning line like it had done previously. So I just went ahead and closed it out. It has since gone through my target, as I do believe it will be achieving this median line, but I'm happy with 2 to 1 versus the 2.3 to 1 that I was looking for. That's perfectly fine. As always, thank you for watching this video, and be sure to subscribe for more.